In this video, I'm going to do an overview of the key taxes that you need to know as an entrepreneur here in South Africa. In our previous video, we discussed the registration process for your business and becoming a formalized entity within South Africa. As you go on your journey, there are some taxes that you need to be aware of. In this video, we're not going to cover all the taxes, just the key main taxes that you need to know. If you're behind with your taxes for 3, 5, 7 years plus, we have additional videos that we're going to be releasing over the coming weeks where we give you information on how you can catch up and become compliant with your taxes. My name is Frederick Chikambure. I am the CEO of Chikambure, an accounting practice and business consulting firm running out of South Africa. First up is the big one, income tax. This tax is going to heavily depend on how you structure your business. And as we discussed in the previous video, if you run your business as yourself or as a sole proprietor, you will then pay income tax in your personal capacity. Any profits you make in your side hustle, in your business, in your project will be added to your personal income tax, and you will pay it based on your individual income tax bracket. For example, if you have an investment property and you're working as an employee, at the end of the year, you will add the income from your investment property, your rental income. You'll deduct your interest expense and other expenses from your rental income. And the profit that you make from your investment property will then be added onto your personal taxable income. So it'll be added to the money you made as an employee, which will then mean your total pay is going to be larger and your tax bracket may be affected, but your tax that you pay at the end of the day will be based on your individual tax bracket. If you've registered your business and you have a private company, a PTY Ltd, where it's a separate legal entity where you run your business through, that separate legal entity or your private company will pay tax, a corporate income tax or company income tax, and the tax rate as it stands today is 27%. So all the profits that you make, you multiply by 27%, and that is the tax that you're going to pay. So in the previous example, you have an investment property, but it's bought through your company, and you have rental income through your company. Once you deduct all your expenses, the profit that is made is then you pay income tax on that profit. Whereas where you're a sole proprietor, you will then take those profits, add it to your personal income and pay tax. Where the profits of your business, if you were to take them into your own hands and it becomes a dividend that you pay yourself, you will pay an additional tax called dividend tax. Whether it's corporate income tax or you're paying as a sole proprietor your personal income tax, you are likely going to need to make these payments through what they call a provisional tax system. But we'll discuss that later in the video. Next up is VAT, value added tax. Value added tax is a tax added onto most goods and services, not all, in South Africa, and it currently stands at 15%. You are required to register for VAT the moment your sales in any 12-month period exceed 1 million rand. From the moment you exceed 1 million rand, it is compulsory for you to register for VAT and to start charging VAT on your sales invoices. If you're still below 1 million rand, you've just started out on your business, you're not required to register for VAT, and in most cases, you do not need to register for VAT. In some cases, you do want to register for VAT if you're applying for government tenders or other tenders with big companies. They may require that you are registered for VAT. For you to voluntarily register for VAT, you need to at least have made 50,000 Rand in sales over the last 12-month period. You can then opt in to register and start charging VAT. Once you're registered for VAT, you will charge a 15% markup on all your sales. If you have sales of, let's say, 100,000, you will then charge your customers an additional 15,000 Rand. So the total invoice will be 115,000 Rand. The 15,000 Rand portion goes to SARS and you keep your 100,000 Rand. But before you pay over that VAT to SARS, you will reconcile the VAT that you received from your customers and the VAT that you paid to your suppliers. So the VAT on your expenses, and you'll pay the difference to SARS. Moving on to PAYE, pay as you earn. Pay as you earn will only apply if you plan on hiring people, and if the employees that you're going to hire, one or more, are going to earn above a certain threshold. PAYE is a system that SARS uses to get you as an employer to withhold taxes on behalf of SARS from your employees and paid over directly to SARS each month. So at the end of the month, when you pay your employees, you will deduct PAYE from their salary, pay them their net salary, and then pay the PAYE portion over to SARS. PAYE often comes with UIF and SDL, and you'll need to calculate those amounts and pay them over to SARS. The threshold for employees is 95,750 Rand in this year. So if you have an employee who's going to earn above 95,750 Rand and they're under 65 years of age, you are likely going to need to register for PAYE and pay over those taxes each month to SARS. You will withhold these taxes at the end of the month, and you have up until the 7th of the following month to pay over PAYE to SARS. Before we move on, let's talk about dividend tax. Dividend tax, it only applies if you as the business owner pay yourself some money from the profits of your business. So your business will pay company income tax and it has monies left over. Those profits after tax, you can then pay yourself a dividend. In that case, you will need to pay 20% over to SARS and you keep 80%. As a business owner, you have a number of options on how you can pay yourself. You can use dividend tax, you can pay yourself a salary, you can also have your loan account involved as well, depending on how you are transacting with your business. We have an additional video where we discuss how you can pay yourself and how you can structure your pay as a business owner. So there are two additional taxes that I want to touch on before we move on. First one is turnover tax. Turnover tax is a different type of tax that is applicable to micro businesses. These are businesses that are earning below 1 million Rand. And if you choose to, you can register for turnover tax. It will replace your income tax, your VAT, and everything else. You can then register for this and you just pay one flat rate based on your income. It's a much lower tax rate. It has tax tables that are much lower than your corporate income tax, and it's a much simpler process. You may choose to opt to register for that. The other one is small business corporation tax. So your company income tax, if you're a small business and you qualify, you would pay a lower rate, also based on some tables where you pay lower rates of tax if your taxable income or your profits are below 1 million or below 500,000 specifically. These taxes we'll also discuss in separate videos because there are a lot of qualifying criteria that you need to be aware of. The next tax you need to be aware of is provisional tax. This is actually not a separate tax, but a payment system for SARS. So let's say you're an individual who has additional income to your PAYE, or you are a business registered paying corporate income tax or SBC, small business corporation tax, or turnover tax. To make those payments for your income tax, you will do a calculation halfway through the financial year, typically in August, where you estimate how much you're going to make in that financial year or that tax year, and you pay the taxes, the first batch of taxes halfway through the year, let's say in August. Then at the end of the financial year, let's say in February, you then calculate what your taxes have been and you make the second payment. You can also opt to do a third payment if your taxes turned out to be higher than what you had anticipated throughout the year. That then allows you to make 2 to 3 payments over the year rather than one lump sum payment at the end of the year. This also allows SARS to handle their cash flow and receive payments earlier rather than one large payment at the end. Okay, so let's recap. Income tax. Income tax is paid by people who are running businesses as sole traders and businesses or companies. Companies will pay 27% on their profits. Individuals with businesses will pay based on their personal income tax tables. Value added tax. VAT is 15%, and you're required to register for VAT once you cross 1 million Rand in your total sales value for a 12-month period. PAYE, you only need to register for PAYE when you have employees who are going to earn above the tax threshold. For people under 65, the tax threshold is 95,750 Rand. Turnover tax and SBC or small business corporation tax are alternatives to corporate income tax, where you pay a lower tax if you qualify or if your business qualifies. Provisional tax is a payment method system where you pay 2 to 3 payments of your income tax over the course of the year. One in August, one in February, and the third one after the financial year end. All right, I hope that simplifies the tax landscape for you and you feel a lot more confident to tackle the compliance landscape of your business. If you still have some questions and you're still unsure, I'll be happy to chat to you. You can book a free consultation and you'll find all the information in the description below. Remember, SARS requires that you keep up to 5 years of accurate records of your business. So it's important that you maintain these records from the beginning. If you found value in this video, please leave a like and subscribe so other entrepreneurs and business owners just like you can find this content as well. I'll see you on the next one.